You're watching live pictures from Berlin, where Chancellor Angela Merkel and Greek Prime Minister Antonis Samaras are about to hold a news conference. Samaras is in the German capital asking for more time to complete his reforms while keeping Greece in the Eurozone. We'll bring you more headlines from that as we get them. So what is the outlook then for the Euro? I'm joined here in the studio by Hans Redeker. He's head of FX strategy at Morgan Stanley. Hans, thanks for coming in. Now, I believe you're calling for the Euro to go up to 130 and possibly beyond. Given what we're about to hear from Germany and the Eurozone crisis and back in full flow, that's a very brave call, isn't it?
Well, it is a brave call, but as well taken into the context of our long-term call. We had been euro negative for the past 1.5 years, and what we think is now happening is that there's a significant improvement in the capital market outlook, which comes on the back of the recent initiative of the European Central Bank. And I guess that the market relevance of that initiative is highly underestimated. When we look, for example, at our risk-adjusted yield differential models, there we have currently a fair price of the euro of about 130. What we need now to see the euro to move higher is as well a decline in bond market volatility. And I assume that the upcoming events in September are going to develop that. So the 6th of September ECB meeting is very important, in which Mr. Draghi hopefully is going to lay out terms and conditions for the Draghi put to work. And when we are seeing clearer on that, then you will have more confidence getting into the marketplace and you will have European assets supported.
But it's not just the ECB meeting on the 6th of September we have, of course, the German Constitutional Court, the Dutch elections, Eurogroup. We've got several event risks. What would it take in the month of September for you to reverse your bullish call on the euro?
Well, this is, of course, the European or the German Constitutional Court decision is the most important event here. And if, against our main projections, the European or the German court would decide that the ESM is not in line with the German constitution, then you will have certainly an initial decline of the euro, potentially down to 117 or even below there. But yes, then you have as well to consider what it actually means. It means if the ESM is not in line with the constitution, it is going to increase the pressure on the German government to have a referendum on the constitution, so that Germany can impose a new constitution which then allows them to develop the roadmap to go into political integration. A German referendum is a game changer. So if I would see this happening and Germany heading towards opening the way to a roadmap and political integration, that would stabilize matters in the medium term.
But that could, yeah, as you say, that's a long-term thing. We're talking months, not days or weeks.
That is right. But you will have at least the light at the end of the tunnel. Now, many people would say
it's a long tunnel.
It's a long tunnel, and a referendum is imposing uncertainty. But we think that a referendum is a necessary step towards political integration and fiscal integration, and you need to have fiscal integration for this currency union to work.
Okay, now, but I'm just trying to pin you down on your euro-dollar call. You see euro-dollar at 130, but that doesn't seem to fit with your generally bullish, optimistic view of the US. Stronger economy, better PMI data, housing market recovering, Fed might not do QE3, so surely that means euro-dollar lower, higher dollar.
No, what you have to consider here is what is really the driving force, right? What matters. And what really matters is the situation in Europe. So if we stabilize the situation in Europe, you will have ripple-on effects which will be felt globally. You will have as well a more positive risk environment. And don't forget, when you have a better US environment, does that necessarily mean that the US dollar is going higher? We have seen it over the past 10 years that the US dollar in this environment was actually depreciating. And the reason why is that US investors abroad are looking for higher yield. So that actually means each time you have a better risk environment, they shift these funds
US
abroad.
Capital goes overseas.
Absolutely. So that means it is pretty much consistent. But what you have as well to look at, where you have the exception to the rule, that is potentially sitting in dollar yen, because in dollar yen you have a clear sensitivity to US bonds and the curve. And if you have US bond yields moving higher, then you will have dollar yen moving with it. So I think that currently the setback we have seen after the Fed minutes, that is offering you with an opportunity to buy into dollar yen and as well to look into euro yen and other yen crosses, which I believe have potential to rally.
So your call is for lower yen?
The call is here for lower yen, and it has definitely does require that the bond yields are rising. But if you see this, then the call is for lower yen.
Okay, Hans, thank you very much.
Thank you.
That was Hans Redeker, Head of FX Strategy at Morgan Stanley. That's all for now, but do watch us at this time every weekday for Market Pulse. A look at what's moving on financial markets and why. I'm Jamie McGeever. This is Reuters.